Welcome to Markets Now. I'm Michelle, work with Brian Grete, editor of Pro Farmer. Mixed closes in both grain and livestock futures trade on Monday. And Brian, like I said, a quiet day in the grains, and we continue to kind of drift sideways in most of the grain markets, don't we?
Absolutely. And we're needing a catalyst in here to kind of cement lows in these markets. It looks like maybe we posted lows in March, but to get any kind of upward movement, we need some kind of bullish catalyst and to encourage the funds to actively cover short positions. And we just haven't seen that yet.
So we have a report coming up on Thursday. Do you think there might be a catalyst there? What are you looking for?
Well, corn ending stocks, the average estimate is down 70 million bushels, but that would still leave ending stocks well above 2 billion bushels, and so I think it probably takes a little bit more than that in terms of a cut to ending stocks to give the market any kind of fuel. Sustained fuel, I should say. We could get a short-term pop if they do cut the carryover as much as what is anticipated. But I think importantly here, corn exports, you can make a case that the USDA needs to raise them. You can make a case that corn for ethanol use needs to be raised, and also feed and residual use. And so all three components of the demand side could be increased, and so that I think would be as important as anything there.
But you and I both know we have been disappointed in this report before after a positive quarterly stocks number, haven't we?
Yeah, so USDA has some time technically, and so they could choose to do very little. I do think that we will see corn ending stocks pull down. It might not pull down as much as what the trade is anticipating, and that could give us kind of a bad taste, so to speak, after the report. But we'll have to see, and I just don't think there's probably enough in the April report to give us any kind of fuel there. The bigger focus is probably going to be safrinha corn weather in Brazil, the early planting pace here in the United States, those types of things that could potentially get the funds to actively cover short positions.
Absolutely. So let's talk about South American numbers. What do you expect from USDA in terms of adjustments? And will the CONAB numbers, which come out earlier that morning, trump those numbers?
Well, I think that the market right now is confused between the difference between USDA and CONAB, and in all likelihood, I've talked to USDA. They're going to remain above what the CONAB numbers are. The biggest difference there in talking to USDA and me inferring what they said is that I don't think CONAB's keeping up on the expansion in the northeastern portions of the country, and so their numbers will continue to be lower than what USDA's is. And USDA takes a balance sheet approach where they reconcile the previous year's production to what the usage numbers tell them. And CONAB doesn't seem to do that. They do it on a broader scale about every 7 years or so. And so that's the primary difference. So I think you'll continue to see major differences between CONAB and USDA on the Brazilian production estimates.
Yeah. So one other area I want to visit about is the global veg oil market. We saw a pullback in bean oil this morning, but soybean oil's had a pretty nice run on the heels of palm oil. That market's kind of turned over a little bit, hasn't it?
Yeah, absolutely. And I think that, really what the soy oil market is waiting on right now is the sustainable aviation fuel credits and the feedstocks that will go into those coming from the government. And it was anticipated that the self-imposed deadline there was March 1. Well, the administration missed that by over a month now. And so we'll see potentially in the next couple weeks. We could get news on that front, but that has implications for soy oil and also for corn-based ethanol in terms of what qualifies as a feedstock for the SAF credits.
Yeah, no doubt. And of course, we're hearing rumors, at least, or maybe some sources saying that maybe it isn't going to be as favorable, the GREET model, for either corn ethanol or for SAF than we would like, right?
Absolutely. And I think that the big one there is the corn-based ethanol, because that's the next step forward for that industry. It needs to qualify. And I think that what we're hearing is that it will qualify if you meet certain environmental standards and those types of things. And so they're just given a little bit bigger hurdle than automatically making corn-based ethanol eligible for those credits.
You bet. So you talked about the funds early on and that we need a catalyst for them to get out of their short position. And in fact, they added or doubled down here this last week, adding to their short position. What do you think if we don't get that catalyst in the WASDE report? What is the most likely scenario we will see? Because they're usually not this short this time of year, are they?
Correct, and I think that probably the biggest risk that we could see is that they just kind of systematically cover some of their short positions as we move through spring, and we don't see a big price response in corn, soybeans, or wheat. And if that happens, then it opens additional downside risk, especially if we get off to a good start to the growing season here in the United States. And so. Really, what we need is that big move up with that push, some kind of catalyst, like I mentioned, where the funds decide to actively cover some short positions. It gives us some upward price movement. The farmer has the ability to make some sales and those types of things.
You bet. So cattle market, live cattle futures bouncing today after about a $15 correction off of the recent highs, and that was spurred by these fears about the bovine influenza A. Do you think that market is trying to bottom or not?
Well, until we calm down the investor fears on the influenza A situation in the dairy herd, and keep in mind it's only in dairy at this point in time. It's not in the beef herd, but yet it caused that liquidation pressure in the cattle futures, and that's because of basically when in doubt get out type of mentality, and it gave them an opportunity to book some profits on long-standing long positions. It gave them the opportunity to limit the risk and those types of things moving forward. But, we need stabilization. We need stabilization in the future. So we saw potentially that happening on Monday. We saw stabilization potentially in wholesale beef prices, which have pulled back significantly. We'll have to see that continue. And then the cash market, it was down 250 last week on average, and we'll have to see that stabilize as well. So really looking for just that stabilization across the board in the cash fundamentals and the futures for cattle right now.
Well, and the feeders led us higher, Brian, and we made new lows for the move there too. So do you have to get the feeder market to bottom first or not?
No, not necessarily first, but if feeders, that's actually a problem area right now. And so, we need to see some demand come in the feeder cattle auctions and those types of things perk up for that market to stabilize.
You bet. What about the hog market? It is actually pushed into new contract highs. It feels like the funds are buying on all of these dips that we've seen. Is that just a technical play, cattle hog spread unwinding, or is there just good demand there pushing that market?
Well, demand, I'll speak to that first. Export demand is excellent for pork, and so that's giving us good, solid underlying fundamental support. The cash market, it continues to rise seasonally. Pork cutout continues to rise seasonally. And as long as that's the case, we'll continue to see strength in the futures, in my opinion. Now, we've built pretty big premiums into the summer month contract, so we kind of have to keep an eye on that as we move forward. But the cash and the product markets are showing no signs at the moment that they're going to slow down. And so seasonally, we typically pull back a little bit in this time frame before we make our big move up to the summertime high. And so if we don't get that short-term pullback, then there's incentive for the traders to remain buyers.
Yeah. The funds have really pushed long in this market, though, pushing to the contract highs. So do you think there's, how much more upside is there?
There's some risk there, I think, if the funds get overextended to the upside and the premiums get too big in the futures over the cash index, then you're probably going to set it back. But you mentioned earlier, the key right now, I think, from a technical perspective, is we see buyers underneath the market. So anytime we get a price dip, it doesn't last very long, and we see fresh buyers come into the marketplace. And as long as that's the case, that's a well-supported bullish market.
Brian, what is your overall take on the money flow situation in the market? You see them buying and pushing gold to new highs. The funds are buying there and in the cocoa market, and they were in sugar, but they haven't been in, say, the grains or whatnot. What's going on there? What's that dynamic?
Yeah, so grains are kind of just drawing the short straw at the moment, so to speak. Like you mentioned, some of the other markets, some of the soft markets, we've seen big price moves up. Some of the metal markets, big price moves up, all-time high in gold, like you mentioned. Copper made a big move up. And so those markets are attracting the investor dollars. Recently, we had new highs in the equity markets here in the United States, and so that's attracting investor dollars as well. And the grains are kind of on the short end of the stick, so to speak.
Yeah. All right. Thanks, Brian. Brian Grete with Pro Farmer. That's Markets Now.